Okay, everyone loves the idea of buying a house with $0 out of pocket, but nobody talks about what comes with it. What's up, everybody? My name's Taylor. I'm a local real estate agent serving communities here in Northeast Arkansas, helping people buy their first ever home or helping people sell the home that they've lived in for a long period of time. So whether or not what you're doing is buying or selling, all my information is down below to book a one-on-one call with me, or if you want to just reach out to me, my cell phone number is there as well. Without further ado, let's get into this video. So before I get started, I want to break a myth that I hear all the time. Well, Taylor, I would love to buy a house, but I don't have 20% down to put on the property. And guys, I've got to tell you, first off, before I mention any of these other points that I have, you do not have to have 20% down to buy a house. A lot of people, whenever they start thinking about buying a house, they want to just start scrolling on Zillow and go and tour some homes with their favorite realtor, but they often neglect one of the most important factors when actually buying a home, and that is the lending or the loan type that you're going to secure this home with. Now, I'm not a loan officer, so I'm not trying to sway you one way or another, but you've clicked on this video because you want to know how to buy a house with $0 down out of pocket. Now, just briefly, if you want to know a little bit about loan types, there's a whole other types of videos on YouTube that you can watch. But most commonly here in Northeast Arkansas, you see what's called USDA loans, which is zero down loan options. You've got FHA, and then that's usually around a 3.5% down. Then you've got conventional options starting at 5%. That can go up to 20%. And then you've heard statements like in-house banks or in-house loans. And those are your local banks that are, explicitly for the local city that you're serving in. And obviously, they are more lenient to what they loan on. Now, remember, with these government loans like FHA, VA, which is a Veterans Assistant Loan, USDA, they have a little bit higher standards with the actual condition of the property that you're buying compared to more of an in-house loan like a local bank. As long as the numbers make sense to them, they don't care that there's some paint missing on the window. They don't care that the roof is just a little bit older or that, there's a missing shingle or so. Like, at the end of the day, as long as the numbers make sense to them, they're going to give you the money. So that's the first thought or preface to this video, is that way you understand the difference in the loan types. That way you understand which loan type gives you a zero down option. With that being said, here is what zero down actually means. Like, what does zero down actually mean? And oftentimes this is referred to as a rural development loan, or in other terms, a USDA loan. Now, this means that there is no down payment, but it doesn't mean that there's actually no cost. And when you buy a house, specifically, regardless of the loan type, you're going to have other costs associated. It doesn't just mean you have to have $0 in your bank account and you make no money, and therefore you get to buy a house. Unfortunately, if that was the case, there would not be any kind of renters at all, and everyone would be buying a house. Here's the thing. Whenever you see or buy a home, you do have costs that are associated with that purchase, meaning you've got closing costs, which right now can range anywhere between $4,000 to $7,000, depending upon the type of home that you're going to buy. Now, granted, we are able to get a lot of those closing costs covered by sellers right now because of the type of market we're in. If you want to know how we're doing that, send me a message. I'll tell you how. But you've also got other expenses that are pretty common, like inspections, appraisal, lender documents, or lender applications rather. And so just because you hear this phrase of $0 down does not mean that there's no expenses associated with it. And here is where people get confused. They start thinking that it is just a free housing market or a free house entry, meaning, hey, like I said, I don't need to make any money at all at my job, or I can have all kinds of debt and still be able to pay a house with no money. Unfortunately, people are thinking too short-termed with zero down loan options, and they don't think about how much more money they're having to overpay on a property, perhaps in the certain market that you're buying in, or what your payment might be. Because here's the deal. If you buy a house, you have a mortgage payment, you have taxes and insurance and utilities. Just because it's zero down out of pocket up front does not mean it's a free house later on. Now, you might say, well, Taylor, duh, that sounds a little, elementary. You would be surprised. Now, here's the catch with buying with a USDA loan, and these are not geared to be negative, but they're just factors to consider. The benefit of putting money down on a property is that you've acquired some pay down towards the principal. Therefore, your payment is actually going to be a little cheaper. Now, granted, you might actually get a higher interest rate if you put a lot more money down. That's weird how that works, but I'm not the one that makes the rules. But my point, though, is when you put 20% down on a $100,000 house, well, now you're only making payments on $80,000 versus when you buy zero down. Well, instead of making payments on 80, now you're paying on 100. And so the first downside to putting zero down is that you have no potential equity in the property starting off. Some of the other ones that I can just think off the top of my head is the limited areas that do qualify for USDA. It is called a rural development loan for a reason. And so I know Paragould offers a ton of flexible options in Northeast Arkansas, other surrounding cities like Brooklyn, Jonesboro. You have to be in specific parts of the town to be able to qualify for the USDA loan. So without being too specific and too long-winded on this topic, it might cause problems for you if you're only buying a property with zero down, but it's not in the location that you're wanting, or maybe it's in another city here and it doesn't qualify per either the location, or sometimes, like I mentioned vaguely earlier, is the stricter qualifications that the USDA might follow. Meaning, I've seen homes that, we were using a USDA loan on, and some little bitty chip paint structure that was on something that was going to be taken off the property the second we closed. Whenever the appraiser goes out there and they say, hey, per our guidelines, there cannot be any chip paint. Well, guess what we have to do? We have to fix that chip paint. We have to go fix it, take all that old chip paint off, repaint it, and then repay the appraiser to go back out there and to make sure that repair is being taken care of. And so there are certain specific qualifications that the house has to meet. And so if you're shopping for a fixer-upper, if you're shopping for a home that's old and needs some work to it that you're going to plan to do later, USDA may not be the option for you. People ask me all the time, like, when should I do a zero down, like USDA option versus putting some down payment on the property? And this really works when you have a stable job or stable income. And especially whenever you plan on being at this place for 3 to 5 years, to make sure that your equity does start to build as that property value starts to appreciate over time. If you're planning on buying a house and moving in 2 years, in general, no matter what kind of loan type you're putting down, you might find yourself in a very tricky situation whenever you go to sell that property, because if you've paid $100 for it over 2 years, the likelihood of the appreciation have gone up is very minimal, unless you just got a crazy deal on the front end, but most of the time people don't. And so let's pretend you paid $100 for it, and let's pretend in 2 years it's maybe worth $105. Well, after you pay closing costs, commissions as a seller and stuff like that, all of a sudden the equity that you've gained is completely gone, and now you're actually losing money on that deal. So if you plan on buying a house and staying in it for the next 3 to 5 years especially, this is whenever USDA makes the most sense. And another point is, if you have really good income coming in but just low capital or low cash on hand, this is another option. So keep in mind, like, you don't just have to have tons of money in your bank account to buy a home, but you don't want to use that as a crutch just to buy a home. Like, you want to make sure that you can afford the payment, you have enough money to start putting towards the principal of that property, and of course, if something like an emergency happens, you can fix that rather than living paycheck to paycheck. But hey, look, I'm not your financial advisor. I've literally had people use USDA options, zero down on their property, got the seller to pay all their closing costs. They show up to the closing and say, yep, we just went and bought a $1,500 fridge and we have $100 in our bank account. Now look, I'm not your mom, I'm not your dad. You can do whatever you want with your money. But to me, if I'm going to buy a house, first of all, I want to start saving up capital, but especially don't drain your savings on something like a refrigerator whenever that could be something that could be negotiated on the front end. And so if we would have known that they wanted a refrigerator or didn't have a refrigerator, we could have negotiated that for them. But God, I mean, people, do not drain your savings account on the day of closing that you buy a house. And Y'all are getting me worked up, and I don't want to get my blood pressure going right now. That's whenever the USDA options make sense, but let me talk about when it doesn't. It doesn't make sense to go zero down whenever you are more of a unstable situation. Your job's been talking about laying some people off, or maybe you've not been working there for a long period of time, or maybe you just got a great sales job and it's coming in waves right now. USDA may not be the best option for you because you want to be able to confidently say you're going to pay your bill. Otherwise, it goes to foreclosure. And so, not to mention, USDA doesn't really make a lot of sense for people if they plan on being at this property for a short time, like I kind of mentioned earlier. And then, if you already feel like you're stretching your budget, what I mean by that is a lot of people, they'll get approved for $300,000. And they'll go buy a house for $300,000. Well, just because the bank says you can afford a $300,000 house, but now all of a sudden you feel like you're living like a slave because you're bound to paying that mortgage payment. Therefore, you have to work overtime to pay this bill. Otherwise, you're going to be complaining that the devil's attacking you all the time. Like, let me tell you something, guys. Living beyond your means is actually a big blessing. Hey, and look, as a realtor, I get paid more technically for the more house that you buy. But I want this house that you were planning to buy to be a blessing to you and not a curse. And somebody give me an amen in the comments. We recently had a seller of ours. They've been looking for homes and didn't really know where to start. We connected them with a loan officer. They were able to get a qualified for zero down loan option. They didn't really have a lot of money in the bank. They were making good money. They just didn't have a lot of capital saved up. And of course, within a couple of weeks of us looking on the market, we finally found a home off the market for them that they were able to put in an offer, get all their closing costs paid, got a little bit of a concession to do some maintenance stuff around the house. And of course, we were able to close on that property within 30 days. And the seller made a lot of money. The buyer got the house that they really, really wanted in the area that they loved. And they cannot be more happy. And so if you find yourself in a predicament that you want to buy a house, you make good money, your credit score isn't a disaster, you just don't have a lot of money in the bank to put towards the property right now. I believe in emergency funds. I believe in savings accounts. And so if you don't want to deploy all that emergency, this loan option, USDA zero down, can be the biggest blessing for you and your family. Now, look, I'm not a loan officer. I'm not trying to sell you on one way or another, but I'm saying for certain people, certain circumstances, these loan options can make or break the peace and the enjoyment of your life moving forward in this market. So if you're curious whether or not your situation demands for a zero down option, or might it make sense to either wait and save up some money, feel free. All my contact information is down below. I would love to have a simple conversation with you about, hey, does it make sense to even buy right now? Or how could we get all of those concessions taken care of for you? That way you don't have to come out of pocket for anything. And so that is an option. And so if you've been contemplating on buying a house and you don't know where to start, all my information is down below. You can book a one-on-one call with me, or if you go to my website, my personal information is there. You can email me, call me. My social media handles are down below as well. Reach out to me there. I am a local realtor in Northeast Arkansas, helping people buy and sell real estate. My name is Talon. Hopefully you've enjoyed this video. If you've got some value out of it, comment something that you might have learned, or leave a like and share this with a friend that maybe is looking to buy or sell in the future. Thank you guys again so much for watching. We'll see you in the next video.